Our next guest is a familiar face on Kitco and perhaps financial news all over the world. He is one of the most legendary investors of our time. Jim Rogers is back. He has founded the Quantum Fund in the early 70s, and since then, over the course of the decade, his Quantum Fund has outperformed the stock markets by 4,200%, beating pretty much everything back then. Since then, he's traveled around the world to more than 100 countries, written a number of best-selling books, and managed his own funds. Jim has had great success in all corners of the markets, and he is here to share with us his pearls of wisdom on how to survive this market downturn. Jim, welcome back to the show. Honored to have you on Kitco, as always.
I'm delighted to be here, David, but I make many, many, many mistakes in my life. So it's a nice introduction, but I make plenty of mistakes.
Well, everybody makes mistakes, Jim. It's how you recover from these mistakes that defines you, and you've certainly recovered quite well, which is how you've become successful over the years as an investor. Now, we're going to be talking about some of the mistakes that people are still making today, and of course, maybe draw from the lessons that you've learned from your own mistakes towards the end of this interview. But first, let's talk about the markets. The S&P 500 is down about 20% from the top. The Nasdaq's down more. Cryptocurrencies, many of them have been wiped out completely this year. We're seeing a very serious crypto winter. How should investors survive?
Well, David, the way to survive is not to listen to me or other people. Just stay with what you know. If people invest in only what they themselves know a lot about, then they will know what to do if things go right, and they will know what to do if things go wrong. If I told you to buy X and it went up, you wouldn't know what to do if it went up. You don't know why you bought it. And if it went down, you'd blame it on me. Yeah, you wouldn't know what to do then. You'd blame it on Jim Rogers, but you wouldn't know what to do. So please, if you want to be successful, stay with what you know. And if you don't know anything, do nothing. Put your money in the bank and wait. There will be times.
Mm-hmm. You were actually, I want to talk about the world first. You were cited by Time magazine as being the Indiana Jones of finance, and that's probably due to your extensive traveling. First of all, can you tell us a little bit about how that came about, how that moniker came about, and a little bit about your experience traveling the world and what you saw and what you've learned through your several years of traveling?
Well, David, I always would just look for cheap things to invest in. I didn't care about where they were or what they were. It never occurred to me. I thought everybody did that. You know, I would find markets that were cheap and I would invest in them. Some of them were considered strange. I can remember when Germany was considered strange to American investors. But I was just looking for cheap places, cheap things, and I would invest in them. Then people heard about it. They said, oh, my gosh, you must be crazy. But they kept working. And so people said, oh, he's Indiana Jones. He goes to places where other people don't go and looks for adventure. Yes, I did look for adventure in my own life as well, but also in my investing life. But it wasn't looking to have a name. It was just looking for something cheap.
Indiana Jones in the movies found the Holy Grail. Did you find the Holy Grail, so to speak, of finance? Did you find that one investment that you held up that was the Holy Grail for you?
Well, I can still pay my bills, and that's a Holy Grail. Yes, you know, I did want to retire young. I wanted to have more than one life. And so I did achieve that. And I certainly I stopped working at an early age, stopped actively working because I wanted to seek adventure. I wanted to see the world. And so I did that. That for me was a Holy Grail. Some people think that's crazy. Some people think I should still be sitting in front of a computer on Wall Street.
I ask you this because not a lot of people have, A, had your investing experience, but B, had your traveling experience. And so you've seen all of the world over your travels. That was many decades ago. How has the world changed, in your opinion, over the last 2 decades?
Well, it's interesting, David. There was a study done recently, and that the number one ambition for people, the number one dream, not everybody, but is to get in your car and drive around the world, or your motorcycle, or whatever. It was my dream too. I've done it twice, as you know. I did it once on a motorcycle and once in a car because I wanted to see the world and I wanted to have adventure. Has the world changed? Enormously. And even between my 2 trips, the world changed enormously. My first trip, you couldn't use credit cards, on the first trip going around. Everything was very, very complicated. And there was the Berlin Wall, there was communism, there was Red China, there was Soviet Union. All that's gone now. Everything has changed dramatically.
Okay. And you moved to Singapore several years ago, and I believe, I'm paraphrasing, I believe you've spoken to other media about how you see Asia rising. You said that if you were smart in the 1800s, you moved to London. If you were smart in the early 1900s, you moved to New York. And if you were smart in the 2000s, you moved to Asia. Is that a view that you still hold?
Yes. Whether we like it or not, the 21st century is going to be the century of Asia and the century of China. 40 years ago, there was no China. Now it's the second largest economy in the world, et cetera, et cetera. There are gigantic changes and prosperity taking place in Asia. And I can look out the window and see it. Anybody who doesn't know about it can just look out the window or come to Asia. You'll see. It's astonishing, the changes that have been taking place. But the same thing happened in England in the early 19th century. Astonishing changes took. Look at America. America was absurd 150 years ago. People thought it was a joke. They quickly learned that America was an astonishing success.
We're certainly seeing capital flows into Asia, and of course, investors all over the world flocking to Asia. But what's interesting to me, Jim, is if you look at some of these Asian countries that you've cited, China, Japan, even Singapore, where you live, the majority of the population is still locals. It's very homogenous population. Immigration is not as buoyant as, let's say, as it was in America in the 1900s. In other words, I don't see the entire world flocking to Asia just yet. Why is that? What's holding people back, you think?
Well, a lot of the money is flocking to Asia, as you probably know. China's got the largest foreign currency reserves in the world. Japan is number 2. Korea has huge numbers. Many Asian countries have staggering amounts of assets that they have built up. So people's money is coming to Asia, but also some immigration, nothing like it was in America in the 19th century or even the 20th century. But no, people are. I live in Singapore now, and I see more and more foreigners all the time. Somebody's coming. Not just with their money, but with their bodies as well.
And long after, I suppose, both you and I are gone, Jim, from this earth, what do you think is going to happen to the world's economies? Who will be the biggest? Goldman Sachs put out a research report. They're projecting growth into 2075. I'm just going to read one paragraph from this research report, Jim. China is forecasted to overtake the U.S. as the world's largest economy by around 2035, while India is expected to have the world's second largest by 2075, according to Goldman Sachs research. They're also projecting economic growth to slow down in both emerging and developed markets. Do you agree with this view that China will be number 1 and India will be number 2 in 60, 70 years time from now, 50 years?
Well, I think it'll be sooner than 60. I think it'll be sooner than that. But it doesn't matter what I think. Goldman Sachs is smarter than I am. We all know that. And so we have to listen to Goldman Sachs. It is certainly happening. It has certainly happened, as I said, in the last 40 years. There are astonishing changes that have taken place and continue to take place. And, the United States is the largest debtor nation in the history of the world. I don't like that, but it's a fact. I have to deal with that. 40 years ago, America was still a creditor nation. So changes are taking place, and the world, if you want to be successful, you have to recognize changes and adapt to those changes. Do I like the fact that America is the largest debtor nation in the history of the world? No, I have 2 teenage children, but those are facts. And we have to deal with it.
Could one argue, Jim, that the large amount of debt that America has accumulated is also a reflection of the large global power that America has exerted all around the world over the last 70 years?
Well, no, America has developed a huge amount of power the last 100 years. It's been longer than 70 years. No question about that. And America continues to have a lot of power. But history shows that when countries get overextended, either economically, militarily, politically, whatever, they usually peak and go into decline. I'm not talking in my opinion. This is a simple historic fact.
Mm-hmm.
100 years ago, Britain was the richest, most powerful country in the world. There was no number two. 50 years later, it was bankrupt, literally bankrupt. The IMF had to bail out what had been the richest, most powerful country in the world. Go back in history. It has always been changing, and it always will.
Yeah.
When countries get overextended, they usually wind up in decline.
For the American audience, actually for any audience around the world watching, I think they're wondering, and they agree with you, Jim, this is just a historic fact that you've cited. What should America do to not have the same fate as the British Empire, as the Roman Empire, as the Chinese dynasties, so on and so forth?
There have been many others too, Spain, France, lots of places. Yes, you're right. Well, what should we do? We should cut spending with an axe. No, with a chainsaw. We have this gigantic debt, and it gets higher every day. We should cut spending. We should start reducing our debt. Are we going to do it? Of course not, David. Come on. If you ran on a policy in Washington, maybe you would get elected. But after a short time, people would say, wait a minute, this is very painful. We don't want to do this anymore. Nobody likes pain, even if they know what's good for you. So no, is America going to do it? No. I mean, I wish we would, but I know simple facts.
Mm-hmm. This is a statement that some other investors have, and it's not my opinion, but please evaluate this statement. America may be on a secular long-term decline, like you've said, for the problems that we've discussed, but it is still the so-called cleanest shirt in the dirty laundry basket, so to speak. If you look around the world currently, there are not a lot of other places that are as competitive on a corporate level and therefore not as attractive as capitalist America to invest in right now. Would you agree or disagree with that?
Well, America is certainly, if you said to most people in America, where do you want to go? They would say America. Where do you want to invest? They would say America. But that's because most people still don't know the facts, just as many people did not know the facts about the UK or about other countries that peaked and went into decline. Yes, no, America's great. We've got great PR, great movies, great TV, great lots of things. But that does not mean that beneath the surface there are not serious problems developing. David, I said I have teenage children. I don't like it. It's a good time to be an old American. It is not a good time to be a young American, in my point of view.
I want to talk about the markets first before we look long-term to wealth preservation. Jim, this year has been a rough year for the capital markets, like I mentioned earlier. What do you think caused this huge bear market that we've seen?
Well, what happened was we had the longest bull market in American history. Starting in 2009, things were great in the U.S. That's the longest in American history anyway. It doesn't mean it can't last 40 years, but it never has. Countries always when things are good for a while, people get overextended, they get overconfident. They think it's new investors come in. New investors call their friends and tell them, oh, I've discovered this new thing called the stock market. It's so much fun and you can make money and it's easy. It's easy to make money, and that's always happens at the end of bull. It always has happened. It's happening again. Things get overextended, things get expensive, and we always have a bear market. This is not the first time this has happened, David.
Yes. Well, let's talk about history now. You actually survived investing in the late 70s. You'll recall that in the late 70s, early 1980s, we had very high inflation in the United States. And in fact, right now, we have the highest level of inflation since 40 years ago, Jim. And this time, it's coupled by a slowing economy. So we have stagflation and we have a bear market. These are some forces that nobody likes. Even if you're not an investor, nobody likes high inflation, and watch their purchasing power erode away. So just a question for the average Joe first before we talk about investment implications. What should the average person do right now to preserve his wealth? Because inflation is still quite high.
Well, back to what I said before, they should only put their money where they themselves know a lot about where they're putting their money. Otherwise, when things go wrong, you don't know what to do. and things probably will go wrong again. You mentioned the 70s. David, we had big inflation in those days, and as you point out, it's worse now. David, in 1980, the interest rate on United States government treasury bills was over 21%. That's not a typo. They had to raise interest rates what would be extremely high now in order to kill inflation. Interest rates are nothing compared to 21% now. So if we're going to solve this problem, we're going to have to face a lot of pain. Do I like it? No, but I have to deal with facts.
Now, the Federal Reserve has been raising interest rates aggressively this year. Do you think that was one of the causes of the market correction? And if so, how much further can they go in terms of rate hikes?
Well, do I think they've gone high enough? No, it was only less than 2 years ago that the Federal Reserve was saying there's not going to be inflation. And then they said, oh, it's temporary. Don't worry. This is transitory. These guys don't know what they're doing. Most central bank officials or bureaucrats or academics, they don't know how the world works. They just want to preserve their job. But you said they've raised interest rates. Sure, they have. But I repeat, they were 21% on treasury bills, short-term treasury bills last time around. So no, we're going to have a lot of pain before we solve this problem.
What would you say are some of the biggest risks for investors in 2023 right now?
Well, this is 2023, and 2022 is finished. I don't think we have those risks. And if we do, David, we have a very serious problem if we're still worried about 2022. No, the biggest risk of the central banks, not just the Federal Reserve. The guy in Japan has said, he will print his word unlimited amounts of money. And he does. Goes to work every day and prints as fast as he can. We have a lot of central banks doing things like that. Therein lies our problem. Whenever you have a lot of money printing, it distorts markets, it distorts inflation, it distorts interest rates and gigantic debt. In 1980, America was a creditor nation. We were still a creditor. Now we're the largest debtor nation in the history of the world. Big things have changed since then, but not for the good, at least not as far as an American, which I am. No, I see what's happening. There was no there was still Red China then. There was still Soviet Union then. A lot of huge things that have changed in the world.
Mm-hmm. Are you worried right now about the prospect of a global conflict, a hot war?
Unfortunately, I am always worried about that. History is pretty clear that we've had many, many wars in history. There was a study recently of American history. America's been around since 1776. And every year except 15 of those years since 1776, America's been at war somewhere. Do I like that fact? Do I like that statement? Of course not. But we, for whatever reason, I should say Washington, for whatever reason, seems to like war. So there's a very good prospect. You see what we did in Ukraine. We jabbed the Russians as often as we could. You see what we're doing in Taiwan. I mean, Nancy Pelosi flew to Taiwan. I mean, she must want a war to fly to Taiwan to jab the Chinese in the face. Why do you have to do that? Let's try to solve problems, not aggravate problems.
As an investor, if you're looking at this from the perspective of America wanting war, or perhaps looking at history, except for all 15 years we've always had war, should you not just invest in the military-industrial complex then? Stay long that sector?
Well, I have had investments in defense at times in my life. I don't think I have many now, if any, but no. Certainly, if we're going to be have war, military companies will do very well. They always have. Mm-hmm. I don't think I have any investments in that sector right now. Maybe I should listen to Kitco and go and look for some this afternoon.
We should listen to Jim Rogers. Jim, all right, let's go back to the economy. Now, your outlook for 2023, some people say we're already in a recession. The National Bureau of Economic Research in the United States, which is the organization that designates recessions, haven't officially done so yet. Are we in a recession right now, Jim?
Well, I read the same things you do, and I listen to Kitco. The problem is, it's very rare in history that everybody has known a recession is coming. This is the most broadcast and most forecast recession that I've ever seen in my life. And knowing that most people are usually wrong, I would say we're probably not there. It depends on where you're talking about. But for instance, China has been closed. Now China is opening up. That's going to give a big boost to the world economy because they are the second largest economy in the world. So I would not be surprised if there is not a recession yet. I expect it certainly to come. David, I'm sure you're at Kitco. The third year of a presidential cycle in American history has usually been a good year in the American stock market. And this is year 3 coming up. And the reason that happens is politicians try to spend a lot of money preparing for year 4, the next election, so they can get reelected. So I would imagine that things are really better than we read, just because the world doesn't work that way. If everybody knows something, it's usually wrong.
What is the government going to do to reinvigorate markets, you think? Assuming that you're right, it's the third year of the term rather. Will they resume printing money? Will they spend even more money? Congress talking about fiscal spending. Will they hand out checks to people? What do you think they're going to do?
Well, you just told them. you know what they know. They know what to do. They know to spend money. They know who in their constituencies wants a new park or a new school or a new road, and they'll spend it. And they will do that. They always have anyway. These are the guys who know how to buy votes. And I suspect that they will do that. That's not to say that there won't be a recession coming eventually. It's just that I have never seen in my investing career or read about one that was so widely anticipated and so widely forecast. The world just doesn't work that way. When everybody knows something, it's usually not right.
That's a rather contrarian statement, Jim. Are you saying that the bottom is near?
The bottom, well, the stock market is, David, the stock market is down, what, 19 or 20%?
Something like that.
I mean, I've been around long enough to know that 19 or 20% is not very serious. Wait till it's down 70 or 80%. Wait till you see companies going bankrupt, left, right, and center. So far, this is not fun. Do not get me wrong. This is not fun. But it's certainly not dramatic or even significant in the history of financial markets.
You've survived many bear markets in your lifetime. Can you please explain to us the thought process, the emotional thought process after one has lost a lot of money? You probably witnessed this. I'm not saying it happened to you, but you've most likely witnessed this with other people in the industry. When somebody is down 70%, what goes on in their mind, Jim? How does one recover from that?
Well, unfortunately, many people, when they're down 50, 70%, say, oh my gosh, I lost a lot of money. Now I have to go back and make it back. And then they start taking more risk. And my answer to them is, no, you don't have to act quickly. The best thing you can do is to sit and do nothing for a while, recover, figure out what's going on. Because if you just rush in when you're emotionally wounded after losing a lot of money, you're usually going to make even more mistakes. So my best advice to people at that stage is do nothing, close the window, and just wait, recover, and then wait until you find something that you know is going to be good. Do not get emotional. Now, listen, I make the same mistakes, David. Don't think I don't. The reason I know this happened is because it happens to me. It happens to everybody.
Can you recount an example in your life? You said you've made many mistakes. Well, we all have, Jim. Can you name one memorable mistake you've made? And if you were to redo everything all over again, how would you redo that instance or that particular moment in time?
Well, I once had a great success in the markets, gigantic success. And I got very cocky. I began to think I was smart. I began to think I knew what I was doing. I had sold short, and I had actually bought puts and made a lot of money. So I covered my puts on the day the market made the bottom. And so I said, well, I'll wait for the market to rally, and then I'll sell short. And I did, and the market rallied. I sold short, but 3 or 4 months later, I was wiped out. And the reason I was wiped out is because I still did not know a lot about markets. I assumed that people knew what I knew. That most of the companies I shorted went bankrupt in the end. But I lost everything first, David, because I did not know enough about markets. I did not know about trading. I did not know enough how markets reacted and how the public reacted. And so I lost everything. Now, I was very depressed. Don't think this was fun. I guess I could have become a priest or killed myself or who knows what. But I didn't. All I could do was start over, and I did. And somehow or another, I survived. And my best advice to everybody is what I said before. If you lose a lot of money, don't think you have to jump in and make it up again right away. Calm down, wait, recover until you find something that you know will work.
In your younger days working on Wall Street, you were an analyst, I believe. You told me the story a while ago. Now, you worked harder than everybody else analyzing financial statements when your peers were probably dismissing these, and you looked deep into some of these companies. What was your process of understanding companies? You mentioned earlier that to be successful, you have to understand something. Doesn't matter what it is, something you like, something you're interested in. All right, let's say I like cars. Let's say I like motorcycles. How do I translate that into investment understanding?
Well, you just said it. If you like cars or motorcycles or something, and you see a change that you know is going to be successful, because every day you go on the internet and you look at cars or you read magazines about cars, etc. When you see something that you know is going to be successful, do some research and make an investment. And then please send me an email so I can do some research too, as well. But that's how you become successful. You wait until you find something that you understand and you know is going to be successful, and then you invest. And if something goes wrong, you will know what to do. If you are investing in what you understand and you know. And if something goes right, you will know what to do.
Yeah. Sometimes it's people invest in the right thing at the wrong time. Put it that way. You buy something that eventually goes up, but maybe timing is just wrong. Is timing something you worry about? Is the time horizon something you consider? Or do you just buy something that you think has long-term potential?
Well, David, I know I'm the world's worst market timer. I've learned that in my investing career. No matter what I want to invest in, I know my timing is going to be bad. I have learned to wait after I decide there's something I want to invest in. But even then, my timing is usually bad. I am very bad at market timing. Some people are great. I've known people who they don't really know a whole lot about what they're investing in, but they are fantastic market timers. They are great short-term traders. And if they own something for a week, it's a long time, but they're so good at it. They're so good at short-term trading, and they can be successful. I'm terrible. I'm horrible at short-term trading. So I am not good at market timing. I'm the wrong person to ask.
Well, what are you very good at? If you could narrow down something that you do better than most other people, and I know you do a lot of things better than most other people. That's why you've become successful. You're not good at market timing. You're not good at trading the short-term markets. What are you good at, Jim?
Well, if I've had success in my life, it's finding things that are depressed. It usually means they're ignored, because if something's ignored, it's usually not expensive. It's usually depressed. And finding change. If I can find something that is cheap, where there's enormous positive change taking place, and I can make an investment, I usually am successful in that investment. It often takes a while. As I told you, my timing is not very good usually, but I have learned to wait and then make an investment. And then, I am lazy, David, because then if you find investments like that, you can own them for 3 years, 5 years, 10 years, 15 years. For me, that's a great way to invest. But as I said, I know people who owning something for 3 days is long term. So there are different kinds of investors in the world.
So something cheap, something ignored, and something that's about to see change. Does anything in the world right now fit those criteria for you, Jim?
Well, the cheapest asset class I know are commodities. I mean, bonds are certainly the highest they've been in history. Property in many places is in a bubble. Go to New Zealand or Korea or places, you see bubbles in property in lots of places. In many parts of America, some stocks have been, Apple and Amazon and Tencent and Samsung, those stocks were going up all the time. So bubbles were developing in those stocks. The only thing I know that's still cheap are the commodities. I mean, silver's down 70% from its all-time high. Sugar's down 70%. I mean, people haven't been rushing out and buying a lot of commodities in recent years. I am not buying them at the moment myself, but you're asking about cheap asset classes. And some countries, I mean, Uzbekistan is very cheap right now. I've made a few investments in Uzbekistan recently, but it's hard to find stock markets or bond markets that haven't been overexploited in the last few years. That's what a long bull market does. People get around to everything eventually.
In your very long career, have you ever considered or explored venture capital? I mean, by definition, you're looking at things that are ignored because nobody else knows about these companies. They're private.
Well, I have. What I have learned about myself is I like to have the feeling that I can sell something. And if you're investing in private equity or venture capital, you cannot sell it. I don't like that feeling. So I have learned enough about myself. I like to think that I can sell whether I can. Or sometimes you invest in some of these illiquid markets, you really can't sell. You think you can.
Yeah.
But no, I basically stay away from venture capital, private markets.
Almost every investor, every great investor I've talked to, Jim, has had at least one stock or asset that they almost bought but didn't and now wish they had. Did anything come to your mind?
Well, sure. I mean, in that regard, when I finished college in the 60s, I went to Oxford. I mean, I should have gone to China. I should have gone to Asia. Listen, I had a wonderful time at Oxford. I don't think it wasn't spectacular. And I learned a lot. But if I look back, if I had gone to Asia instead of Oxford, I'd be really rich right now.
Do you regret not purchasing Bitcoin when it first came out 13 years ago?
Well, I regret not buying IBM in 1914 also. And a lot of things I regret that I didn't do. But, I mean, I don't regret, Bitcoin went from $1 to 60,000. Do I wish I had owned it? Of course I do. But I do not know. I do not mind missing things. I've missed many things in my day. And some things I just know it's not for me and I'm not going to buy. And as far as I'm concerned, most of the cryptocurrencies are going to go to zero eventually. Many already have, as you know. Hundreds have already disappeared.
Does this remind you of the 2001 tech bubble? Any similarities here? A lot of penny stocks back then went to zero.
Of course, yeah. I mean, I said before, the same thing happened. You have a lot of new people coming in. They say it's different this time. They say, you don't understand. You're too old. I've heard all of this before. Same stories. They call their friends and say it's very exciting. It's not my first time. I've seen this rodeo before.
If you had to short one currency for the next 5 years, what would it be?
One currency for 5 years, probably the pound sterling. Now, I'm just answering it off the top of my head because I'm not doing it. Probably the pound sterling. That's the currency that comes to mind. I mean, they're getting themselves into serious, serious trouble in Britain. I don't like seeing it, but the debt is gigantic. It keeps getting worse. They're not solving the problem. They're making the problem. I guess I would say the pound sterling. Okay. If I could think about it this afternoon, I'll send you an email. I think of another one.
All right. Two more questions, Jim. We talked about the changing world order, but I didn't ask you this more directly. Which country do you think will be the world superpower in 30 years' time by 2050?
Well, in 2050, I would have to say it will be China. China will certainly have problems along the way, but I don't see anybody else. It's not going to be Russia. It's not going to be India in the same league. I mean, China will have. America became the most successful country in the 20th century, but my gosh, we had problems along the way. We had depressions, bankruptcy, civil war. We had many problems, but we became astonishingly successful. China's having problems and they will have more, but I don't see anybody else on the horizon that 30 years from now, 80 years from now, will be as successful as China.
Okay. Very good. Final question, Jim. You've traveled all around the world in a custom-built Mercedes and a motorcycle. What is, to date, your favorite motorcycle that you've rode?
Well, if I could go again, I went on a BMW before, but that's because BMWs were the best engineered, and I'm a horrible mechanic. I needed something reliable. But if I were doing it again, I would probably take a Honda, because there are Hondas in every country in the world. You know, you can always get service. Getting service on a BMW is hard because they're expensive and exotic to some people, but there are Hondas everywhere. So I guess if I were doing it again, I would probably do it on a Honda, because I am a hopeless mechanic, David. I am the world's worst mechanic. I'm the worst market timer, and I'm the worst mechanic.
Reliability is a very important factor. Have you tried electric vehicles, electric bikes, new things?
I drove a couple, but I don't have one. I still have gasoline engine automobiles, and so far so good. From what I read, we're all going to have electric cars eventually. And by the way, that is going to cause electric cars, for instance, use 4 or 5 times as much copper as a gasoline car.
Yes.
So it's going to cause distortions in many commodity markets: lead, lithium, copper, the demand for something. And people have not been opening copper mines in a long time, David, or lead mines. So there will be shifts in demand, which will help a lot of markets.
Well, that's a great point. I'll just finish up here, Jim, is that this electric vehicle revolution has problems of its own, like you just said. By and large, the consensus, at least from the mainstream media, is that it's supposed to help the environment amongst other issues. Now, Elon Musk is at the forefront of this. He's also sending rockets to space. He took over Twitter to promote free speech. Do you think, just off topic a little bit, do you think Elon Musk is genuinely trying to save the world and make the world a better place? And if he is he succeeding?
Well, I doubt if Mr. Musk sat down one day 30 years ago and said, I'm going to save the world. From what I can read, he set out to make a lot of money, to have great success. And so far, he's been doing that. Whether it's real or not, I don't know. The problem is there are a lot of bull market heroes in history, and many of those bull market heroes have disappeared when the bear market comes and finances get tough. I have no idea whether Mr. Musk is going to disappear when things get tough or not. I do know he's built up a lot of debt. I do know some people question his accounting, but I mean, I have no idea. So far, on paper, it's a great success.
All right. Well,
but I repeat, David,
yes,
I've been through a lot of bull markets. I've seen a lot of bull market heroes.
Everyone's a genius in a bull market. It's the people that survive the crashes that last.
Well done. You should be on Kitco and explain that to the world. Yes,
I think
everybody should watch Kitco and learn what you just said.
I think they'll learn a lot more from you, and they have in the last 30, 40 minutes. Very enlightening talk, Jim. I just want to personally thank you for being on the show over the many, many years you've been on Kitco, and the last 2 years you've been talking to me. You know, when I first started my job at this desk, I was a younger person a few years ago, absolute nobody. You being one of the greatest legends in the world, you gave me a chance, so thank you.
Okay, well, David, just tell people, make sure people know that they should be careful, especially at times like this. It's a time to be worried and be careful. If you're worried, you'll become educated and you'll be ready.
All right. Well, be careful, Jim. Thank you for that message. And thank you for watching Kitco News. Thank you for watching. I'm David Lin. Stay tuned for more. Don't forget to subscribe to our YouTube channel.